we discussed it a bit here, but the importance of 97.2 million acres this year and what that means for natural rotation next year. This is it's a very busy chart, but this is basically the share of the combined corn and soybean acreage pie for the last 60 years. So we're on an uptrend, right? We've been slowly working in more and more bean acres over that 60 years. You know, what we're looking at in these big dips in orange is basically the year over year corn losses for the following year. So of those 6 years, beans gained on corn every time when we fell a certain percentage below that trend line. So this is a 6% below trend line. Basically, we had too few bean acres that year, too many corn acres the year prior. We saw massive changes going into the next year. I think a lot of people are still saying, well, what if we get another 95 million corn acres next year? You would have to have a pretty good price incentive for that to happen, right? It's a very unnatural thing for that to happen, especially in a cost-cutting year. So that's been a lot of questions for our customer base, like, should I start hedging new crop No 26 beans? There are some insurance products out there that we're starting to look at. Like, you know, I'm not a big fan of margin protection or MCO necessarily as it relates to, like, there's a lot of moving parts to it. But then again, if you're thinking, I would really like to have a really high level of bean coverage next year, and you want to get that coverage on now, that price is being established now, that sales closing date is September 30th. So it is something to talk about. I think that if we have a reasonable bean price going into next year, which is 1070s right now, we're worried about future of trade. China is obviously dribbling in some sales here today. There are some very unique ways to start forward thinking about risk, and it could be through insurance.